Since the last swing trade update episode, the market has generated me some winners and some losers. Luckily for me, the losers have been humble and quiet, but the winners, they have been extreme. Buckle up for another ride. You are in for some detailed reasoning. The best way to learn trading. Without further ado, let's take a look at how the swing trades have done since the last update. We'll look at the technical reasons behind the decisions as well as the individual results. But first, do note that nothing in this episode is financial advice. Everything I say is my own opinions only. And for those of you who haven't, I strongly recommend you to watch the How to Watch a YouTube Technical Analysis episode, linked to at the end. This one gives you thorough guidance on how to actually take on any technical analysis video message, for they may not be as straightforward as you may first think. If anything, it will certainly equip you to maximize your learning as well as understanding trading reality. Now, in this episode, we will look at the following equities, listed pedantically in alphabetical order: Sell Impact, Evolution Gaming, OMXS30, Starval, Swedbank, and Zwipe. Here goes. Since the March bottom at around 10 kroner, Sell Impact has gone up at most by some 300%. What started off as a bullish pennant quickly changed tunes into a declining channel. This channel in turn took another route in what seemed to be an even steeper channel, but then quickly found its way back into the original channel again. I bought it at its pennant outbreak at 36.95. I then sold it all 6 days later at the retest of 35 kroner as the failed pennant outbreak confused me. And as I based my trade on this pennant, I was out of reasons when it didn't pan out the way I had planned for. Do bear in mind that this was before it was in a confirmed declining channel. Luckily, I got away cheaply. I then gave Sell Impact another shot again the day after at around 32.40. This one was a highly speculative swing trade, as I suspected we might be trading near a local bottom. I based this decision on the support level at 32, which held up. The purpose, or should I rather say expectation, of this trade was to see an aggressive V-shaped formation like that on June 18, June 29 and July 2nd. That to me would be a healthy bottom reaction. Instead, the price proceeded to move like a careful slug for the rest of the day, upon which I released my position again shortly thereafter, as it had begun to look more like a bearish continuation flag than a local reversal spot. This was on Friday, and in this case the price proceeded up on Monday, but then quickly rolled over 20% from Tuesday to Thursday. Having followed the stock ever since, it again proved how difficult and unreliable diagonal channels and diagonal support lines can be, for they can change at any time. And do keep in mind that the key word here is diagonal. Horizontal lines and channels are indeed reliable. Diagonal ones, not so much. In this case, and similar to the development of fingerprint cards, Sell Impact's price development began as a bullish triangle, then turned into a declining channel, then into a steeper declining channel, after which it found its way back into the original channel again. Now, on the other hand, it is trading within this channel. Some may protest and say that I should have connected the first two spikes, but this is incorrect. The 2 touch points is nothing. Absolutely nothing. You need 3 touches for it to be confirmed and valid. This third touch we got on August 3rd. Had the price not stopped there but rather proceeded a bit higher, to for example 39 kroner, all the diagonal lines and channels would immediately be rendered useless. I personally don't care much for those jigsaw types of turns, as they rather quickly shift the landscape into some obnoxiously difficult IQ test where you feel stupid for barely understanding the question. For in the case of Sell Impact, what comes next? In these cases, I prefer to take a step back and become an observer, for at some point the clouds will scatter so that you can see the road again. Don't get me wrong, Sell Impact still looks strong technically, but it's a bit too ambivalent for my taste at the moment. On another note, you might wonder what my targets and stop losses were. Well, here's the thing. The way I approach swing trading stocks is at times a bit abstract in this sense. Sometimes I do set up traditional targets and stop losses, but at other times, especially when the stock has a strong momentum or in the very beginning of an expected outbreak, I don't want to get stopped out from noise. This has happened more than once, the latest time being in Starval last year when I got stopped out from a wick spike or whatever you want to call it, after having identified a potential explosion. The next day, yeah, the very next day, the stock shot up by 100%. And in the upcoming month and a half, it would have at most booked me a solid 230% profit. At least in theory. And I had quite a big position too. So no, what I rather do in high probability stocks is to simply keep my position for as long as the technicals look strong. If and when they turn sour and with any sign of constancy, I simply abort them in a heartbeat. No questions asked. For sometimes I wonder whether missed out massive profits actually hurt more than big losses. At least with big losses you have given your money a bang for its buck. With derivatives on the other hand, it is a completely different story. Whenever you apply any type of leverage, you must always set a technical stop loss as well as technical targets. I still keep an eye on sell impact for a possible re-entry. We have an ascending support line that aligns well with the 0.5 and 618 fib for a tiny little fib cluster. Add to the mix that the RSI is in a strong channel and that a retracement to the 27 area very well could coincide with a clean lower bullish red line touch. In such case, we are looking at a nice risk to reward prospect. My two sell impact swing trades ended up costing me a total of 0.7% of my portfolio. I can certainly live with that. This one I've had on my shorting list for quite some time. Of course, shorting an equity that has a strong momentum is difficult and risky. Yet I ended up taking a shot at it. I entered at 600 sharp and my technical targets were 550 and 500 respectively, at which I intended to sell 1/3 each and then free roll with the remainder with a 2-bar trailing stop. The stop loss I set at 650 to get some technical leeway. All in all, this made for a clean 2-to-1 trade prospect. So why then did I decide to short something that is clearly strongly trending? First of all, it has a long RSI divergence, stretching all the way back to February 20. Since then, we have seen new all-time highs but a steadily declining RSI. On top of that, the price finally broke its trend line and the stock began to show some short-term weakness on the hourly. For those reasons, a short looked like a good prospect at the time. The RSI was clearly trading within a bearish blue RSI channel and the price was trading at a tiny horizontal resistance level, as well as the EMA 50 on the hourly. My position was fairly small and wasn't loaded with anything more than a meek 1.7x leverage. As the price reached the resistance area at around 624 a few days later, I doubled down on my short position. This I did for 3 reasons. First of all, the RSI had moved much too aggressively for it to be a long-term sustainable trend and was rather trading in very overbought territories. Secondly, it was trading at the hourly EMA 200. And lastly, it was trading at a horizontal resistance. This trio combined was enough for me to increase my position. But sometimes an equity has a different agenda, and instead of abiding to the laws of nature, or rather my laws of nature, the stock price kept on rising, although I did manage to get out at around 620 as the price was laying around on the hourly EMA 200 like a bloody hammock. The steep RSI recovery within its now bullish red RSI channel alongside a detected clear touch on the lower bullish red on the daily was enough to admit defeat and get out cheap. As the price declined on Tuesday, I managed to exit my trade at a minimum damage, losing just 0.8% of my portfolio despite having doubled down on my short position. Given the technical map at hand and the minimal damage inflicted in the end, I deem this loss a win. I won't be too long on the index trades and will rather go through them quite briefly, mostly because they were all rather spontaneous and based on the lower time frames. My normal way of finding and planning a swing trade is by putting in many hours of continuous work to ensure I haven't missed out on anything of importance. Quite often a serious swing prospect runs over several days of pondering before I identify an ideal entry spot to pull the trigger. Any divergences from this strategy tend to be at the expense of lower profits and higher volatility. My index trades certainly qualify for this category and is something I want less of in the future. Having said that though, trading indices is a great way to learn fast. Trading indices is difficult and will make most other swing trades feel like an easy and relaxing walk in the park. So, in this first one I took a leveraged short as the price hit the upper resistance of a lopsided sideways range. I got stopped out. This next one, however, was quite an interesting one. A big triangle on the hourly and where the top right box on its own constituted a clear power amassing move and where the RSI made it to the lower range of its bullish red channel. I entered at 17:05, half an hour before closing, but the price dipped much too much for my being comfortable keeping it overnight, especially since I had taken it at a more than 20x leverage. Unluckily for me though, I was right all along and the index made a double top at 5% higher, which in theory would have doubled down on my investment. However, aborting a trade once it begins to go against you is never wrong, for often a trade takes another route than the one you had in mind. In such cases, you are left out of control and would do wiser in observing it all from the rail. What this rather means practically is that you must expand your technical skills so that you will be in control in more situations. Doing so will keep you flexible, and this is proof alone that you constantly need to up your game. Now, the more spontaneous my trades are, as in day trades, the worse the results. My Achilles heel is apparently those trades that have little or anything to do with the daily time frames or higher, but rather where I base my trades on the hourly and 15-minute charts. It's bloody stupid, and I should quit it cold turkey. They contain too much noise and confusion, and I have a difficult time in setting noise-proof stop losses. This either causes me to get stopped out prematurely when being correct, or it causes me to take on too much risk, both of which are no-nos. For that reason, I will from now on focus more on swing trading stocks as they tend to trend more steadily. This I will do with or without leverage, depending on how nicely looking the prospects are. The Swedish OMXS30 index has resulted in more volatility that I'm comfortable with, and any trades on it will from now on be based on the daily and weekly and with modest leverage. This of course unless we get some truly juicy spots, such as clean upper bearish blue or lower bullish red RSI line touches. For more on that, please watch the extensive RSI trilogy. My trades in OMXS30 ended up costing me 1.6% of my portfolio value. Starval continues to be the lion's share of my current portfolio. This goes for several reasons. First of all, I know the company well, but most importantly, I know how the stock behaves. This gives me a good edge, which I'm not afraid of exploiting. As mentioned many times before, Starval has never looked stronger technically, and so far all my technical targets stand. For a detailed view on those, please watch the episode How to Strategize an Anticipated Parabolic Run, my Starval game plan, linked to at the end of this episode. So far Starval has behaved exactly as I've anticipated. What particularly pleases me is the textbook bull flag on the daily chart at which the RSI has recharged some explosive powers within a strong bullish RSI channel. And on Tuesday, August 4th, the stock broke out of this flag and peaked at a plus 22.5% increase at solid trading volumes. This carnival proceeded on Wednesday as the price, as of producing this, was up by another 22%. I will sell everything slightly short of 0.50. Probably in increments between 45 and 48, as I don't want to risk missing the boat. For from experience, Starval's tops are short and aggressive, before beginning another free fall to the downside. Being greedy can quickly turn into a costly endeavor in this stock. My initial technical target of 0.50 is still in play, at which I expect the price to bounce. On top of the technical arguments in the Starval game plan episode, we also have a flag target. In this case, I don't count the spike for the simple reason that it was highly temporary and occurred at low trading volumes. Rather stretching it from the root to the closing price, we get a measure of 0.22. And if we add this to the breakout point, we end up at, ta-da, 0.50. On a final Starval note, an additional reason why I think it will bounce at 0.50 is because the weekly RSI is trading at historical top levels. The weekly RSI seems to have some sort of a strong resistance at around 75. This of course doesn't mean that it cannot reach into the 80s or even 90s, but it sure does strengthen my theory. A bounce at 50 and down to 38, 35 or 28 would most likely bring the weekly RSI with it for a proper recharging before attempting the 0.80 to 1 krona field. Initially my position was at around 40%, however that proportion has grown as the stock has gradually increased in value, and the closer it has come to its technical target the less risk it has constituted. Under normal circumstances this position size will be nothing short of idiotic and irresponsible. But as mentioned in the I'm All In episode, sometimes gaming theory goes beyond hard numbers. It is a risky play indeed, but highly calculated. Having said that, don't try this at home. My average purchasing price for my Starval position is 0.135, and as of this moment it is up by 210%, or a 102% return on my portfolio. I entered my initial position at around 130 and only managed to reach my first target, at which I sold off 35% to secure profits. And as always, once I reached my first shorting target, I immediately lowered my stop loss to break even. Hence the remaining 65% I sold off once the price got back again to 130. However, the trade still generated a net plus 7% return, not too impressive of course, but every little counts. As mentioned, my Swedbank trade generated a 7% return of investment, or a humble 0.7% to my portfolio. Saving a fun one for last. When I first laid eyes on this baby, it didn't take me more than 5 seconds to realize its strength. Of course, I didn't throw myself headfirst into it, but rather made a thorough analysis before committing any money and before having figured out how to set up the trade as ideally as possible with regards to risk, returns and potentials. I made my initial entry here, where the price was comfortably cruising at a support level and the price was at the end of a bullish triangle. The price was clearly trending since its March bottom, and its RSI was strong on all time horizons, especially on the hourly, as it made one clear touch after the other on the lower bullish red. A huge sign of strength, as anyone will know who has watched the RSI trilogy. My entry point at 940 kroner was at the very end of a cup and handle formation with its technical targets just south of 19 kroner. 1 week later, as the price broke the previous local high and everything still looked uber bullish, I added another 40% to my position at 1234. The very next day, the stock took off again and I sold off 20% of my total position at 1496. Upon taking the first trade, I publicly declared on Twitter that I did not expect the price to push beyond 18 to 1850 without a fight, as this level constitutes a historical pivot high. On July 28, the price opened at a slight minus, upon which I quickly resorted back to reading, which is my morning routine whenever the markets are calm. For typically when an equity moves violently, it does so either immediately upon the market's opening or prior to closing. Thus, when Zwipe begun in a light sleeping mode, I thought it safe to leave it unattended for the day. When I later checked in on it about an hour later, it had gone bonkers and was trading at plus 26% or so. I had sure missed the climax of the show, but still managed to get out at 17.36 for a healthy 64% profit. Now, what's even more pleasing is that the stock shows no technical signs of slowing down. It is currently trading sideways whilst recharging its RSI in its bullish red channel. A re-entry sometime soon might very well be in play. My only concern is that many indices feel a bit toppy and that an across-the-board sweeping correction might be a sign of health before continuing higher. And if we look at the RSI on the daily, a correctional move down to around 1440 might be the ideal sign of continuational strength. My Zwipe swing trade didn't take too long to explode. It generated a 64% return or an 11% increase of my portfolio value. To sum it all up, sell impact still looks technically strong, although it does show a lot of inconsistencies and confusion, at least to myself. For that reason, I will take a step back and reassess the stock once the clouds have scattered and the coast is clear. My 2 trades cost me a total of 0.7% of my portfolio value. I tried to take a speculative short at Evolution Gaming, however it backfired. Luckily though, my position was a small one, and despite doubling down on it, it made no more damage than a 0.8% loss. Starval is strong and on steady course, and I do expect it to hit its initial target at around 0.50. When you watch this, it probably already has, or hopefully so. As of recording this, my Starval position is so far plus 210% and has increased my portfolio value by 102%. Swedbank is in a downtrending channel and still looks weak. My short resulted in a net plus 7% return as only my first target was hit, which was equivalent to a 0.7% portfolio value increase. Zwipe, on the other hand, generated a healthy profit in short time. Thanks again Framgångsjakten for the tip. It still looks technically strong, however, but it does trade at a resistance level and the risk for a drawback is too high to justify re-entering, at least for now. A bounce down to 1440 would, given that the technical map remains bullish, be the ideal re-entry spot. The trade booked me a 64% profit or an 11% increase of my portfolio. That was all for now, thank you and goodbye.